Don't miss this one because I'm going to give you the complete rundown on Lucid if you've not been paying attention. And tomorrow I'm test driving a Lucid, so don't miss that follow-up video either. Hey guys, Tony here. Welcome back. It is October 2023 and we're continuing the discussion about Tier 2 EV companies. Today's topic is Lucid, and as you guys know, over the last couple years, as these new EV startup companies have been popping up, I have been telling you that I did not intend to invest in them due to the expectation that they would have a lot of startup cost and probably lose money for the first several years. Now we're in 2023, almost finished with 2023. Lucid is sitting at $4.34 as we film this video today. So is now a time to start thinking about Lucid, or are there some things that you need to know before deciding whether to make an investment in Lucid? For those of you who have not been following Lucid closely, my intention in this video in just a couple minutes is to catch you up on everything you missed over the last couple years, and then talk briefly about their finances and what is up next for Lucid. Lucid became a publicly traded company officially in July of 2021 after a SPAC merger with Churchill Capital, July being right about here on our timeline. Since then, it has traded as high as $57 and mostly trailed down over the last couple years, as I mentioned just a second ago, closing today at $4.34. So now let's take a minute talking about what makes Lucid unique, what some of their challenges are. We'll go through the green, yellow, red dashboard and briefly talk about the financial statements. Lucid's core concept out of the gate was to focus on the high-end, very luxury customer. And they have one basic product right now, the Lucid Air. There are, as you can see, 5 different versions of it, with the most recent one being the Lucid Air Pure at a lower price point. But basically, we have a price point here between $77,000 and $250,000 for the premium Lucid Air Sapphire. Manufacturing of the Lucid Air began in 2021 in Casa Grande, Arizona, in a purpose-built facility, which Lucid has been continually expanding. In this flyover drone video, courtesy of YouTuber Bear's Workshop, I will put a link to him in the video description. You can kind of see the progression from the original build of Lucid's factory to its scale here today in 2023. The current manufacturing capacity of that facility in Arizona is about 34,000 units, although it could potentially build up to 400,000 units per year. Lucid also recently announced the opening of their second factory. This one is in Saudi Arabia. The units will primarily have most of the manufacturing done in Arizona, then they'll be shipped over to Saudi Arabia for completion, and then eventually, in a couple of years, Saudi Arabia will be a fully standalone manufacturing facility. Currently, Saudi Arabia is able to output 5,000 units per year, although as it ramps up, the eventual capacity of that facility will be 155,000 units annually. Let's talk first about a couple of the great things that Lucid has going for it, and then we'll talk about some of the challenges. The first thing that I want to highlight is that this company has very strong backing from the Saudi Public Wealth Fund, who has made a major investment in Lucid, including a recent $1.8 billion additional funding. That does give the Saudi Public Wealth Fund a control of almost 61% of the company via stock ownership. One additional thing to know about Lucid is they have a patented and unique high efficiency powertrain design. And this patented high efficiency design opens up opportunities for Lucid to license out this technology to other auto manufacturers. In June of 2023, they announced that they had inked a deal with Aston Martin to do that very thing. Aston Martin being their first licensing customer, with contracts worth in excess, it says here in this article, of $450 million. Aston Martin will pay Lucid technology access fees for Lucid's technologies in a combination of Aston Martin shares and phased cash payments, with Lucid becoming a shareholder of Aston Martin. That powertrain design is of interest to companies like Aston Martin and potentially others because of its unique high efficiency. In fact, if we look at the rankings of EV cars by range the Lucid Air is right up there in the #1 slot with a range of 516 miles. One other piece of good news to note is that on October 20th, just a couple days ago, Lucid announced that the Lucid Gravity, their SUV model, will premiere at the LA Auto Show on November 16th, with production and deliveries to begin hopefully in late 2024. Now let's pivot and talk about some of the challenges that Lucid has, starting with production and deliveries. Looking at their production numbers and deliveries over the last 2 years, in 2021, that first quarter when they started up, they produced 150 and delivered 125 units. They did have a steady ramp up each quarter in 2022, totaling 4,369 deliveries in 2022. Moving into 2023, Q1 production units was 2,314, Q2 2,173. When we look at those two quarters year over year comparing to 2022, that is a healthy increase. However, when we look from Q4 into Q1 and Q2 of 2023, the production numbers actually went down from Q4. And really what we want to see is that every single quarter, the production is getting higher and higher each quarter on these startup companies. And then Lucid just made an early announcement about the Q3 production and delivery expectations. It's going to be 1,550 produced for Q3 2023, deliveries of 1,457. That is a big step down from Q3 2022. Lucid has communicated that they expect Q4 to be their biggest quarter. We're sitting at 4,267 units so far for 2023 against their stated annual goal of 10,000 units. That was a pre-announcement, and we will get more details here in just a couple weeks. Their upcoming earnings is going to be on Tuesday, November 7th at 5:30 p.m. Eastern, and I will be providing some follow-up coverage for you guys after that call. If we go back and look at the pitch that Lucid did to investors back in 2021 when they were doing the SPAC merger and look at their original goals for the company, we can see here up at the top that they expected to produce 20,000 units in 2022 and 49,000 units in 2023. Once they got into production and started selling the vehicles and reality started setting in, that 20,000 units that they were hoping to produce and deliver in 2022 got scaled back to 7,000, of which they actually only delivered 4,369. And that 49,000 units that they were hoping to produce and deliver in 2023 got scaled back to around 10,000. And it remains to be seen in the rest of this year if they're going to hit that 10,000. And I guess what I'm saying is they scaled up the factory and the processes with very high expectations, 20,000 into 49,000. And the reality is that they have not been able to deliver on that to date. We've talked about some of the great things that Lucid has going for it and some of the challenges that they've had meeting their own expectations on production and deliveries. So let's close this out looking at the green, yellow, red dashboard and a very high level look at the financial statements. And then we'll come back together and talk more about Lucid after the earnings call on November 7th. If you are not familiar with the channel, the green, yellow, red dashboard is just a pictorial way that I have to convey to you my take on the risk of an investment. Something that is all green, like a Costco, for example, is going to have less risk. That doesn't mean that you jump in and buy Costco just because everything is green. You still need to do your own due diligence and figure out what is a good value price to buy the stock at. But when we see a company that has a lot of yellow and red, then you know that there is some risk involved in buying the company, and you need to spend even more time understanding the financial health of the company. Red boxes for Lucid. Profitability. No, the company is not profitable. That means that until it is profitable, it's going to be tough to get this stock price to go up over the long term. Return on equity is negative. The short interest is high, 26%. Wall Street has a very dim look on Lucid at the moment, and it is being shorted. Dividends should actually be yellow, so let's change that out right now. I don't expect new companies to be paying dividends. Earnings per share, back up here in the top left, I have yellow because it is negative. The company's losing money, and it's actually getting worse quarter over quarter. We'll look at that in just a second. on the income statement. Dilution risk I have is yellow or medium. The company just finished a round of cash raise back in the end of May, early June, including $1.8 billion from the Saudi Public Wealth Fund, and the additional money of that $3 billion came from a stock offering. So there was some dilution to shareholders, but it did improve the cash position on the balance sheet. CEO and management is a tough call. I put it as yellow. The CEO is Peter Rawlinson. He seems like a smart fellow. Back in the day, he was a vice president at Tesla before getting involved with Lucid. And I guess the reason that I have the box colored yellow for Lucid is they have not done a good job forecasting the demand of their product. On the positive side, the green boxes, the company is sitting on a healthy cash position, especially thanks to that $3 billion that they just raised. The working capital we'll see on the balance sheet is also healthy. The debt to equity ratio we will see on the balance sheet is fine. I have that one colored green. And on an annual basis, 2021 to 2022, the revenue growth rate is strong. I have that colored green. I may have to change that to yellow as we finish out 2023. The final thing that I look at is insider trades. I have this one colored green for Lucid. I'm looking for unusual patterns of insider selling, especially in a run-up of a stock. If you're seeing insider selling, you should be paying attention to that. That would be a yellow or a red box for me. There is no pattern of insiders dumping Lucid, although there was one recent filing on September 18th for 46,000 shares from Michael Bell, Senior VP. He still owns 1.4 million shares, so not too worried about 46,000. Let's close this out now with a very high level look at the financial statements to understand why we have that picture with all the yellow and red boxes on it. I'll do a more deep dive in November after the next quarterly earnings. Looking at the top line revenue, you can see that the progression from 2021 into 2022 was healthy and growing, although we have a problem now because the last two quarters, the top line revenue is both lower and flat. Another problem is that the gross profits, after you take out the cost of that revenue, those gross profits are not only negative, but the negative is increasing every single quarter. After we take out the operating expenses, you get the same situation here with operating income not only negative, but getting more negative every quarter. Lucid has a negative net income, with the most recent quarter being negative $764 million. Again, these look bad, and they are bad. Not unusual for an EV startup company, but the thing that I'm really focusing on is what is going on with the revenue at the top line. When are they going to fix that? When are they going to get more customers buying these vehicles? That is one of the main things that they need to tackle, and you as an investor need to be aware of when you're considering to buy, sell, or hold Lucid stock. Moving over to the balance sheet, cash and cash equivalents sitting right now at $5.2 billion. So a decent amount of cash on the balance sheet. Inventory is a little bit high at $850 million, although on the most recent earnings call, management said that they are working to reduce that inventory. They had to basically front load some of the inventory due to supply chain risks. And as those supply chain risks get worked out of the system, they can reduce that inventory. I want you to always be looking at the balance sheet to check the working capital, also current assets versus current liabilities. When you see that current liabilities far outweighs the current assets, the company has a working capital issue, potentially in the next 12 months, a problem paying their bills. Now with Lucid, we don't have that problem. We can see that current assets right here, $6.2 billion, total current liabilities, $888 million. So that is why Lucid got a green box for their working capital. Long-term debt is just over $2 billion, and that has remained steady. The other thing that I look at is shareholders' equity versus the total debt. So that's our debt to equity ratio. This one also got a green box for me, with the total debt at $2 billion and the shareholders' equity at $5.9 billion. Looking at the most recent quarter on the cash flow statement, we have negative operating cash flow, negative $700 million, negative $437 million on the investing cash flow. They've been holding capital expenditures steady around $200 million. They had another 228 from change in investments. And then financing cash flow, you can see that $3 billion right here that they raised in that recent round of funding and dilution. Going back to the income statement, the big issue here, like with all EV startup companies, is the cash burn. Again, when we look at the operating income or the net income, it's just a massive amount of cash that these companies run through to get up to a production volume where they can get profitable. And if you are investing in an EV startup, cash burn is something that you need to be paying very close attention to. Not only do you need to watch the top line revenue, you need to look at the cash burn. And when you combine looking at those things, you can then sort of forecast, is the company going to need to raise cash in the next year or two from now? Are you going to be diluted some more? Are they going to add some more debt to the balance sheet? All of these things work together to help you understand also why the company is being shorted. For me right now, I would love to see Lucid succeed, but they have a lot of things stacked up against them. I think for myself, I'm going to take a very cautious approach over the next couple quarters and see how their production and delivery numbers come out. There might not be any immediate risk of bankruptcy in the next year, but there is definitely some concerns I have about what is going to happen to the stock price over the next 12 months. I am Tony Denaro. If you got value out of this, hit the like button, subscribe if you are new here, and thanks for watching. I will see ya on the next video.